Final accounts with adjustments. And this module is once again about practice. You have to do practice, otherwise you will not reach at the perfection. So in this practice question, we will see again a trial balance with few adjustments. And those adjustments would be mainly about the provision for doubtful debts, bank reconciliation statement, and claim against the losses. Okay. So all this we have already studied in our earlier modules. So no worries at all. The only thing is you have to concentrate. Okay. So concentrate very well, and then you will see that the things will become easy for you. But how you can concentrate without calculator? Okay. Call your younger brother. Please give my calculator. And yes, it's good if you can have a glass of water with you. Okay. But writing device and notepad, don't forget it. And now concentrate on this question. Yes, it is a trial balance with you. And we know very well that trial balance gives equal amount to us in the debit and credit side. So debit side and credit side are equal. Okay. 3,892,600, 3,892,600. Very well. In this trial balance, we have capital account, drawing account, building, showroom racks. Oh, is it new thing for you? Don't get confused. Where it is written? In the debit. Okay. Would it be taken as an expense or as an asset? Yes, these are showroom racks. Long-term thing here. Yes. So it should be asset. Great. So that's how you have to concentrate. Well. So anything new, just put all your logics on that to learn that what is this. Furniture and fixture. Okay. Staff advance. Once again, it is something new. Okay. Concentrate. We have given advance to the staff. What does it mean? That we will receive this amount back from them. If we will receive back, it means it is our receivable. If it is our receivable, appearing in the debit side means it is asset. Okay? So don't confuse and no worries at all. Just put your accounting logics to understand the accounting phenomena. Okay? Good. Provision for doubtful debts appearing over here. We know very well. This is to be worked out, and then we will be subtracting it from the debtors. Export sales, new thing. Local sales, new thing. What to do? Yes, just concentrate. Where it is appearing? Credit side. Okay. Now, should it be income, liability, or equity? It cannot be your liability since it is your sales. It is not your owner's equity. Then what left? It is your income, export sales. Okay. By the way, these are the sales that you made outside the country. This is the sale that you made inside the country. Well, so both are your sales. Good. Administrative expense, all in one. Okay. So we don't have long detail of the expenses. All these are administrative expenses. Then bank overdraft appearing in the credit side. Overdraft. Yes, it is our liability. Good. Since it is appearing in the credit side, it is not our asset. That's great. Marketing expense are expenses. Cost of goods sold. Yes, this is worked out with us. So when cost of goods sold is worked out, in this case, as we were discussing as a tip in the earlier module to remember as an ITTR, that if cost of goods sold is worked out and appearing in the trial balance, the stock appearing in the trial balance would always be closing stock. Okay. So this is closing stock because we have already worked out opening stock and closing stock in the cost of goods sold. And this is the second effect of the stock which is an asset now. Okay. And this is the debtors figure, asset, and creditors figure, liability. That's great. This cash at bank with MCB is appearing in the debit side. It means this is our asset. Okay. And cash in hand appearing in the debit side, again, our asset. So this is how you will be marking ILO on the trial balance. You have to mark it yourself. That's why I did not mark it ILO. Okay. Good. So next is charge depreciation at 10% on building, showroom, racks, and furniture and fixture. So remember, we have to charge depreciation at 10%. Just see this working. Okay. We have building, showroom, racks, and furniture. Rate is 10%. Cost is given. Depreciation is this. And this is the net book value. So this type of working you will always prepare for calculating depreciation. Well, sundry debtors include a customer who is in default for 44,000 and expected recovery from him is not more than 75,000. Remember, this is the amount of sundry debtors with you, 744,000. And out of these 44,000 is in default and expected recovery from him is 75,000. Then there is a customer owing 25,000 who is also a creditor for 30,000. However, set-off is not required. We are not doing set-off. We are just giving it as an information that we have a good debtor with us because the amount of creditor is greater than the amount of debtors. He is the same person with us. General provision for doubtful debts is to be calculated at 5% of sundry debtors. Well, let's see this working at the same time. Total debtors we had 744,000. There is a good debtor of 25,000 against whom we had a 30,000 of creditor. So 0% provision will be there. There is a specific debtor at which we will be having 25% provision. Why? Because it's written here that expected recovery from him or from his side is not more than 75%. It means we will be able to recover 75%. So the balance 25% is supposed to be recoverable. We are creating provision. And for general, the provision is 5% given in the adjustment. So we'll subtract both of these two and we'll get 675. We'll subtract this 25,000 and 44,000 from 744. On balancing figure 675, we will work out 5% provision, which will be 33,750. So altogether, the total amount of provision will be 44,750. This is the carry forward balance of the provision for doubtful debt. Total debtors are 74,000 minus this provision, which is the carry forward balance, which is required. Then we will get the net debtors amount 699, which will be appearing in the balance sheet. By the way, you can look in the balance sheet as well. This 699. So this adjustment is done. Provision for income tax is to be accounted for at 40% of the net profit. For this, we have to calculate net profit first, and then we will calculate 40% as provision for income tax. I will come back over here once again. Now, let's see what to do with this bank statement information. So, balance as per bank statement received from MCB on, why I'm saying MCB, why I'm stressing on it, because we had two banks with us, HBL and MCB. So, this information is about this balance, 260. So, no confusion at all. Everything is mentioned clear. So, this information is about MCB that we have on 31st of December 9, and it was different because of the following reasons. Unpresented checks, uncollected checks. We know very well what to do with this in the bank reconciliation statement. And there is few information for which we have not yet recorded. That is unrecorded standing orders. We have not yet recorded in our cash book bank column. Unrecorded credit transfers. We have not yet recorded this 6,000 in our bank column of the cash book. So we will work out this thing. And then goods valuing 10,000 were destroyed by fire. An insurance company has admitted the claim of 7,500. no accounting entry has been passed for this loss. Okay, so remember this also, but now we will be working for this bank reconciliation first. Okay. Okay. So here is the bank reconciliation thing, cash book MCB column. Opening balance is that we are taking from the trial balance. Why I'm saying opening? We are reopening it. So we are taking it from the trial balance. This balance 260,000. So just take it over here. What we see in the debit side, it's there. Now there were two unrecorded items. What were those two? In the adjustment, yes. One is unrecorded standing order payments. We have made payment of trade subscription. So this trade subscription account will be debited and bank MCB account will be credited. Okay. This will be taken to the expenses side. And then we have received rent for which we did not record this credit transfer. This rent, what we have received, will be debited in the bank account, MCB, and will be credited in the rent income account. So just see here that bank account is being debited with direct credit, the rent income, and is being credited with the standing order payment, that subscription. Okay. So the final carry forward balance of the bank will be 264,000. So just have a look in the balance sheet that this MCB bank 264,000 will be appearing in the current assets. All right. Now see this adjustment. Goods valuing 10,000 were destroyed by fire and insurance company has admitted 7,500 claim. So we have not yet accounted for this. These goods were purchased. If we have not yet accounted for these, 10,000 would have been included in the cost of goods sold figure. This cost of goods sold figure, which is in fact appearing in the trial balance. Okay, this cost of goods sold figure. So we have to subtract this 10,000 from the cost of goods sold amount. This 10,000. So just have a look in this working loss by fire. Okay, well, so this 10,000 is in fact being subtracted from the cost of goods sold. This we took from the trial balance, 1027,400, and this is the loss by fire. We will be subtracting from the cost of goods sold, and then this 10,017, 1,017,000, this 1,017,000 will be taken to the cost of goods sold over here. Just have a look, 1,017,400. Got it? Great. Well, and that 2,500 is a claim. Sorry, 7,500 is a claim and 2,500 is a loss. So this 7,500 claim means receivable or recoverable, will be appearing in the current assets, and this 2,500 loss will be appearing in the expenses. So just have a look in the current asset. There is an insurance claim of 7,500. Okay. And if we look in the expenses side, there is a loss item of 2,500 that we are including in the operating expense. This is that 2,500 loss thing. Okay. That's great. And if you do remember, in the bank column, we had a trade subscription, which is 2,000, that is appearing here now. Okay, in the expenses. All right. So just go through these adjustments once again. We have done with the depreciation. We have done with the sundry debtors provisioning thing. We have done with the adjustment in cash book bank column. This bank reconciliation things still to be done. We will do it. Okay. But remember one little thing. Yes. The cash book balance that appears in the balance sheet has no concern with these unpresented and uncollected checks. This is the very important tip to remember. And this is what we have learned in our bank reconciliation chapter as well, that this is just a reconciling item which will just give us a satisfaction that our balance is equal to the bank statement's balance. These are the two items, or the adjusting items are adjusted in the cash book bank column. And then the final figure that we get after this adjustment, we put in the balance sheet. Okay. So by the way, bank reconciliation items have no concern to work out for preparing balance sheet. Okay, that's great. Well, so the income statement, we are done with the local sales and export sales. Total sales is this. Cost of goods sold, I have told you that there is an adjustment of 10,000. Loss of goods, against which we have a claim of 7,500 appearing in the current assets and 2,500 loss appearing in profit loss account. It's an abnormal loss. So being abnormal loss, it should be here. Okay. And the gross profit figure is there. You can calculate through your calculators, please. Administrative expense and marketing expense are total operating expenses with the adjustment of depreciation, bad debts, loss of goods, and trade subscription standing order. Total operating profit is this. Other income, as we know, that rent realized, that was in fact an item we got from adjustment in the cash book based on credit transfer, is 6,000. So the net profit before tax is 507,510. Okay. So the net profit for the year after having all this working is 507,510. Okay, do one little thing. Calculate 40% of this 507,510. What you get? Yes, exactly. That is 203,004 rupees. Means 203,004. It is exactly 40%. So the adjustment was that we have to calculate 40% of the net profit. Okay. So we calculated 40% of the net profit. This 203,004 is also our current liability, because this amount we have to pay as an income tax. So here we go. This is appearing in our liabilities as income tax provision. Okay. Do one small correction in working for. This is in fact something that you have to work out, and here just strike through that this calculation is not correct over here. Okay, rest of the things are quite correct. Here the amount appearing in the liability is correct, and the amount appearing in the income statement is correct, and ultimately our net profit is correct. So the thing is that this is all about our income statement and balance sheet of this practice question. We learnt about the working notes in which we discussed bank reconciliation statement. We discussed the depreciation thing. We discussed the loss and the claim against that loss thing. And we also worked out provision for income tax. Well, the important tips in this module that you have to carry with you are that concept of direct and indirect expense that normally students carry is wrong. Look for normal trading accounts, for normal profit and loss account, or for this financial accounting concepts, there is no concept of direct expense or indirect expense. This direct and indirect expense, or the direct or indirect cost, in fact, this is the concept. This is the concept of manufacturing accounts or the cost and management account. In financial accounting, I don't know how this direct and indirect thing comes over here. What we wrongly speak about it is that any expense which is relating to the cost of goods sold expense is direct expense. No, please don't do this mistake. Okay. It's a sin, by the way, in accounting. Okay. So direct and indirect expense concept is not the concept that we will be associating with the financial accounting. And the second thing is, for classification purposes, all expenses are classified into 5 classes, 5 functions. In fact, cost of goods sold function, this is what we observed in this practice question, then administrative, then selling and distribution, financial, and finally income tax. So from this point of view, this practice question was also a comprehensive question. So thank you very much for your attentions.